It's up over $7,000 probably. This trade right here, I caught it using fair value gap. So that's how powerful using fair value gap is. And let's go now to the chart and let me try to show to you how to identify and use fair value gaps to trade smart money concepts or even ICT trading strategy. Understanding fair value gaps. As a forex trader, you know that the market can be unpredictable and volatile. But what if there is a way to analyze and predict the market movement with a greater accuracy? By understanding fair value gap, you can gain a competitive edge and make more informed trading decisions. We will break down the concepts of fair value gap and show how to use this powerful tool to your advantage. Get ready now to understand everything about fair value gaps. So, if we will talk about fair value gap, we need to understand what's fair value gap and how they are created in the market. And that's exactly what I will start to say to you guys in today's video about fair value gap. So, fair value gap occurs when a price leaves a specific level where there's less trade activity seen and only has one directional price movement. So keep that in mind. One directional price movement and less trading activity. Those two things are very important. Before we go to the chart and I start to show to you guys how to identify fair value gap, actually prepare a very good image to explain to you guys and help you guys to understand fair value gap even better. We need to understand why fair value gap occur and what are the rules to identify a fair value gap, one directional price movement and less trading activity. The other thing that I think is pertinent to understand to answer this question before we go to a lesson and I start to show to you guys on the chart what's fair value gap, how it formed, how to identify bullish and bearish fair value gap, and why they are so important for us traders that trade smart money concept. Or I know too that some ICT trading strategy concept, people that trade ICT strategy, they use fair value gap a lot too. Fair value gap is created due to strong buying or selling pressure. I put here buying pressure, but selling pressure too, because we have bullish and bearish fair value gap, right? Those are the two types of fair value gap that we have in the market. So buying and selling pressure are very important. As I told you guys before, one directional price movement, right? And why when we have fair value gap, we have less trading activity? Because if you have just one directional price movement, you have less trading activity. Why? Let me explain to you. It's very easy to understand. First, to have a market, we need to have buyers and sellers. So if we just have one directional movement of the price, that means that just one of those two participants on one market, buyers and sellers, are actually joining the market. So if you have a buying fair value gap, a bullish fair value gap, that means that you just have right now on the market buying pressure, or they're saying buyers into the market. That's why you have a bullish fair value gap. So a fair value gap is created due to strong buying pressure. Price trades up, begin to top up, and then pulls back into the fair value gap. Another thing very important, you need to understand, on a bullish fair value gap, price trades up, begins to top out, and then pulls back into the fair value gap. The same thing, the inverse thing, of course, happens when we are talking about bearish fair value gap, right? This clears out the imbalance that was made, and almost immediately after the gap is filled, price is able to continue quite higher. That's exactly what I will show to you guys right now on this example right here that I prepared for you guys about the fair value gap. Here you guys can see a very clear example of what is a gap, a fair value gap on the market. So immediately after the gap is filled, price is able to continue higher. Which gap? This gap right here. It's very easy and clear for you guys on this image right here. So that's a fair value gap, and let's go now to the chart and let me try to show to you how to identify and use fair value gaps to trade smart money concepts or even ICT trading strategy. Let's go. I have this huge short, not this one, actually this one right here, that still opens. Actually, I already closed over 90% of the trade. I have, I think, one or two contracts just running on this trade. It's up over $7,000 probably. This trade right here, I caught it using fair value gap. So that's how powerful. I will place this screenshot of this trade exactly here for you guys to see. That's how powerful using fair value gap is. If you really want to make a lot of money in forex market, on the cryptocurrency market, because you will have fair value gap in every single market. Stock market, forex market, cryptocurrency market, doesn't matter. If you have a market, and of course, to have a market, you need buyers and sellers, you will have definitely fair value gap too. To identify fair value gap, it's a very simple thing. Let's just jump to 15-minute time frame. Look what's happening here. Here, we have right now a clear example of a bullish fair value gap. Look what happened here. This right here is exactly the gap, exactly where price made this huge retracement to fill it. Why? Because as I told you guys in the beginning, after the move up, after the price top up, the price will retrace to fill the gap and then go up again, right? So that's exactly one clear example of a bullish fair value gap. You guys can see price was going down, then we move up so fast and price never made a clear pullback to fill the space between this wick and this wick of this candle right here. So at this level, we had a clear fair value gap here. Then we can see that price made actually some move and actually was able to come a little bit below and filled some part of the fair value gap. It didn't fill everything 100%, but it filled something. So our fair value gap, instead of be this, it become this now, right? And then we can see that exactly here, price made some pullback and actually filled this, right? And again, let me show to you guys another example. Here, look at this trade. This is a beautiful trade that I caught using fair value gap trading strategy too, right? Because you can use fair value gap to trade. I'm not saying that you will use just fair value gap. You need to have in mind concepts and understand concepts of mainly order flow and lead trading strategy to just trade fair value gap. But in this case, it was a trade that I took using mainly fair value gap. Clearly here you guys can see the first rule about fair value gap come out. Why? If you pay attention closely, you will see that first, that's not the only fair value gap I had on this huge move to the downside. Because exactly here, I had another fair value gap, right? But the thing is, when you're trading fair value gap, you need to keep your attention on the first one that was made before market break structure and start a bearish or a bullish move. So what I'm trying to say with this sentence, basically, so if price is moving up and then shifted structure and start to go bearish, you need to forget about all fair value gap that was created on this down move. If you have fair value gap here, don't pay attention to it. If you have fair value gap here, don't pay attention to it. You need to pay attention to the first fair value gap that was left behind when price started to go bearish after price shift structure, right? So what I'm trying to say again, just to make sure you guys understanding, is after this shift of market structure, you need to pay attention to the first fair value gap that was left here. That's exactly where you want to pay your attention to. You want to put in mind, okay, that's this point, I want price to retrace to it, then I will start to look for opportunity to short again, right? That's exactly what I'm trying to say to you guys. It's the most important so you don't get lost while you're trading fair value gap. In this trade, you guys can see clearly when price tapped here, I didn't took this trade in this way. That's something I think ICT traders do a lot, but that's not my way of trade. When price go to a fair value gap, when price tap on a fair value gap zone, I always want to see another entry trigger confirmation. For entry triggers confirmation, I use change of character, chalk, internal break of structure, shift of market structure. That's the mainly three of them that I use to trade, right? By the way, if you want to learn how to trade, check out the first link on the description of this video. At the beginning of this lesson, I already showed to you guys a clear example of a bullish fair value gap, and now we saw a clear example here of a bearish fair value gap. Let me show to you guys just more examples of them, of a bullish and a bearish fair value gap. Here we have a clear fair value gap too. Look what happened here. It's still a fair value gap. Doesn't matter if it's huge or tiny, doesn't matter. You just need to see a gap between 2 weeks of 2 candles. And here we have a clear example. And look, probably ICT way of trading for this is a clear entry for them, right? A clear 1 to 1 to 3 risk reward trade. Another thing too that is very important when you are trading is understand where is the liquidity. And to understand where is the liquidity, I already recorded another huge masterclass with a lot of valuable content for you guys. And if you want to learn how to spot the liquidity, how to find it and trade the liquidity in your favor, click on the video that is here right now. In this video, actually, I did a very beautiful trade breakdown too. So check out this video right here and I'll see you guys very soon.